Dear students, we are going to solve one more problem on final accounts of sole trader. This is video number 6. I am Dr. Pandurang Naik, Principal SVS College, Bantwal. This is problem number 6. Okay, trial balance is given here in this problem. With the help of that, you have to prepare trading and profit and loss account for the year ended 31st December 2020 and a balance sheet of Mr. Kenny. So it is a trial balance. Followed by that, additional information is given. Let us look at the adjustments one by one. Closing stock on 31st December 2020, 40,000. So it is very simple. The adjusting entries, closing stock account debtor to trading account. In other words, closing stock should be shown on the credit side of trading account. Let me repeat, it should be credited to trading account. So by closing stock, 40,000 rupees. And again, in the closing balance sheet, it will appear on the asset side of the balance sheet, closing stock. Okay, then stock destroyed by fire was 2,000 and the insurance company accepted the claim partly for rupees 1,500. There are three possibilities in the case of goods destroyed by fire. Number one, entire value is a loss, nothing is recovered from the insurance company. It is not at all insured. Or even if it is insured, it is not admitted by the insurance company. Second one, it is fully insured. Entire loss is being recovered from the insurance company. Third one, it is partially recovered from the insurance company. This is the third case. So in this case, what happens is, goods of rupees 2,000 were destroyed. Therefore, it is credited to trading account. So trading account credited by goods destroyed by fire. Then what is admitted by a company, that is due by insurance company or insurers, that should be debited to insurer's account. Actually, adjusting entries, insurer's account debtor, in this case amount admitted by them is 1,500 and the net loss is 500, so that is debited to profit and loss account. So profit and loss account debtor to goods destroyed by fire account. Therefore, 1,500 should be debited to 1,500 should be debited to insurer's account, and that will appear on the asset side of the balance sheet. And the net loss will be debited to profit and loss account. Let me repeat, 2,000 must be credited to trading account, and then 1,500 should be taken as due by insurers. So that will come to the asset side of the balance sheet. And the net loss of 500 will be debited to profit and loss account. Purchases include goods worth rupees 1,000 purchased for private purposes. This is nothing but drawings. So when purchases are for personal use, to that extent purchases should be reduced. In other words, that's not for sale. Therefore, from the purchases you have to reduce in the trading account. So 1,000 rupees should be deducted from purchases in the trading account. And then in the balance sheet, it will be taken as drawings, and therefore that will be deducted from capital. Actually, the entry is drawings account debtor to purchase account. The adjusting entry is drawings account debtor to purchases. It should be added to drawings and deducted from purchases. And in the trading account, from purchases you have to deduct 1,000, and in the balance sheet from the capital you have to deduct drawings, and drawings also include this 1,000 rupees. Then goods supplied by Kirti worth rupees 3,000 on credit on 30th December. This is nothing but credit purchase. Was not entered in the books. So it is not entered in the books. Actually, the entry is purchase account debtor to Kirti's account. Actually, Kirti is a creditor. Therefore, that will be included in sundry creditors account. So it will be added to purchase account and then added to sundry creditors account. Kirti's amount due to Kirti is included in sundry creditors. Therefore, that will be appearing in sundry creditors. So added to purchases and added to sundry creditors in the balance sheet. In the next, bills receivable and checks from debtors dishonored 2,000 and 1,000 respectively, but no entries are made in the books of account. So when you draw the bill, the entry will be bills receivable account debtor to debtors. If it is dishonored, the reverse entry should be passed. That is, debtors account debtor to bills receivable. That means in the balance sheet, from bills receivable you have to deduct 2000. Similarly, you have to add to debtors 2000. Because debtors is a debit balance. Further debit means it is addition. Bills receivable is a debit balance, but credited means it should be deducted. Therefore, debtors account have to bills receivable account. So from bills receivable you have to reduce 2000 and you have to add 2000 to debtors. And then again regarding check dishonored, when you receive the check, bank account debtor to debtors account, that is the entry pass. But if it is dishonored, reverse entry you need to pass. That means to say debtors account debtor to bank account. So from the bank you have to deduct 1000 rupees. Earlier we have treated as if you have received the check and credited to your account. So that should be reversed. So bank account should be credited and debtors account should be debited. So debtors account should be added with 1000 and 1000 should be deducted from bank balance. So these are the treatments given to the adjustments. Now let us look at the items of trial balance one by one. Stock on 1st January, that is the opening stock which appears in the debit side of trading account. Purchases and sales. So purchase is debit balance 2,05,000. Sales is 3,54,000. Okay, purchases will appear in the debit side of trading account. Of course, adjustments are to be made. For example, here returns are there. Return outward is relating to purchases, nothing but purchases returns, and return inward is nothing but sales return. So from the purchases you have to deduct 5,000, which is purchases return or return outwards. Okay, right. Then return inwards means sales return, so deducted from sales 4,000. Wages will appear in the trading account. Carriage on purchases will be the item of trading account. Power and light, that is also an item of trading account. Discounts. There are two discounts here. One is debit balance, the other one is credit balance. Debit balance is discount allowed, should be debited to profit and loss account. And 2000 discount received, therefore that's an income credited to profit and loss account. General expenses debited to profit and loss account. Salaries to be debited to profit and loss account. Outstanding salaries, that's nothing but personal account, representative personal account. So that will come to the balance sheet liability side, outstanding salaries. If outstanding salaries appear in the trial balance, it has to be treated only once, that is in the balance sheet liability side. If it's an adjustment, then it must be treated twice. Once it should be added to salaries, the profit and loss account. Secondly, it should be shown as a liability in the closing balance sheet. Here, when it is given in the trial balance, it means balance of salaries, it is after adjusting outstanding salaries. Alright, outstanding rent, even that should be treated like that only. So outstanding rent, that will appear on the liability side of the balance sheet. And the rent value given here 12,000, that's after adjusting that outstanding rent. If it's an adjustment, then first it should be added to rent account and then it should be shown as a liability on the liability side of the balance sheet. But here only one treatment, that's in the balance sheet. Depreciation should be debited to profit and loss account. So depreciation here means after adjusting the depreciation to the asset value. So if it is an adjustment, it should be treated twice. Once it should be debited to profit and loss account. And again in the balance sheet, it should be deducted from concerned asset. But here it's a trial balance item, so it should be treated only once, that is in the profit and loss account. A rent, it's an expense debited to profit and loss account. Prepaid insurance, it is representative personal account. So balance sheet is prepared with the help of real accounts as well as personal accounts. So this is a personal account, therefore that will come to the asset side. Penny is a life insurance premium, that's nothing but treated as private transaction, therefore that is taken as drawings. So his personal expenses are paid from the business and therefore that is taken as drawings. Then insurance will be taken in the profit and loss account debit side. Income tax paid is also taken as his personal expense paid from the business, therefore that is taken as drawings. So insurance, drawings, and even Kenny's life insurance premium. So this one and income tax paid, both are to be taken as private transactions. Debtors and buildings, It's an asset, comes to the balance sheet. Furniture will come to the balance sheet. Debtors, okay, comes to the debtors item comes to the asset side of the balance sheet, and creditors will come to the liability side. Bills receivable is an asset, comes to the balance sheet asset side. Bills payable is an item which appears on the liability side of the balance sheet. Of course, adjustments are to be made to debtors, creditors, bills receivables. Okay, so whatever adjustments are given as additional information, that should be treated while finalizing the values of these items, debtors, bills receivables, creditors, etc. Drawings will be deducted from capital on the liability side. Capital is also an item of liability side. From the capital to the capital, you are adding the net profit of current year, and then therefrom you are deducting drawings. Drawings given here and additional drawings which is given in the adjustment. Cash in hand and at bank, so 68,000. From that you have to deduct the check dishonored value. Plant and machinery is an asset, so that will come to the asset side of the balance sheet. So a simple problem. Let us see how it is being solved. Already I explained. Opening stock at the beginning, it is written as on 1/1/2020. Then purchases 2,05,000. Therefore, we have to deduct purchases returns 5,000. You'll get 2 lakh after deducting that. Private purchases include purchases for private purposes, so that should be deducted because that is not relating to that's not meant for resale. And then once again, purchases omitted. You have purchased the goods, but it is not entered in the books of account. It's a credit purchase, so it is added to purchase account. Added, not deducted, added. As a result, the balance is 2,02,000. Wages, direct expense, carriage on purchases, power and light, all these will come to the debit side. Sales, 3,54,000. Then sales returns, it is a debit balance. Sales is a credit balance. Sales return is a debit balance. So you have to remember, purchase is a debit balance, but purchase returns are credit balance. So these things you have to remember properly. Closing stock is 40,000. Then goods destroyed by fire. So the value of the goods destroyed, that should be credited 2,000. Then you have to balance the trading account, and you find credit side is heavier than debit side, and the balancing figure is 1,33,000, which is nothing but gross profit, and it is transferred to profit and loss, and it is brought forward here. You see, brought down by gross profit, brought down. In other words, you could have written by trading account 1,33,000. You could have written by trading account within bracket gross profit brought down, and discount received is credited here. Salaries debited, general expenses, discount allowed, debit balance, depreciation, rent means rent paid, insurance paid, loss of goods by fire, that is that part of goods destroyed which is irrecoverable from the insurance company, 2,000 minus 1,500. So if you balance the profit and loss account, you'll get balancing figure 79,500. Okay, this is to be transferred to or added to capital account on the liability side of the balance sheet. Actually here you have to write to capital within bracket net profit. Okay, once you understand, you can treat in any way you like. Come to the balance sheet. Actually it is not for the year ending. Balance sheet always should be written as on 31st December or as at 31st December. It is not for the year ending, because balance sheet is values of assets and liabilities as on a particular date. Even within one day, value of assets may change. Unlike profit and loss account, the incomes and expenses are for the entire year, total incomes and total expenses for the current year. But here it's not like that. Values of assets and liabilities as on a particular date. So here, cash in hand and at bank 68,000 in the trial balance, but check is dishonored to the tune of 1,000. As a result, it is reduced by 1,000, 67,000. Bills receivable 10,000 and check dishonored here. Sorry, bills receivable dishonored here. Therefore, to that extent, bills are reduced. So 2,000. So balancing figure is 8,000. Debtors 45,000. But you would add bills dishonored, because once you receive the bills, value of debtors had gone down. But now Since it is dishonored, we have to reverse that. Therefore, it should be added 2000. So also checks dishonored. So you have to reverse the effect. So once again, debtors value has increased. So 48,000 is the total balance of debtors. Closing stock is 40,000. Then prepaid insurance 1,000. Amount due by insurers, though goods destroyed 2,000, insurers have admitted just 1,000, 1,500. So due by insurers. Furniture, plant and machinery, land and buildings. Come to the liability side. Creditors 50,000, and to that you have to add one unrecorded transaction of rupees 3,000, goods purchased from Kirti, and it's not recorded. So due to Kirti, which is included in sundry creditors. So 3,000 is the value. 53,000 is the total value. Bills payable, that's no adjustment, as it is you have to take. Outstanding salary, it's a representative personal account, appears in the trial balance. It should be treated only once. So also outstanding rent, it's appearing the trial balance. It's already adjusted to rent, so it has to appear only in the balance sheet. So 1,000. Capital 2 lakh. To that you have to add net profit of current year. You see 79,500. This should be added here. You will get 2,79,500. From that you have to deduct drawings which you find in the trial balance. For example, here you find drawings here 5,000. So these 5,000 should be taken. Okay, 5,000 is deducted. Then income tax, again it is part of drawings. 3,000 should be deducted. And goods withdrawn by for private use 1,000. Alternatively, what you could have done is drawings together 5,000 plus 3,000 plus 1,000. 8,000 you would have deducted once instead of separately deducting. Total drawings including what is given in the adjustment, you could have taken 5,000, 3,000 and 1,000, 9,000 you could have deducted from the total of capital after adding net profit. So and even this one, sorry, one more item, personal LIC premium. LIC premium is paid, therefore that is also to be deducted. As a result, the net value of capital is 2,69,500. So remember, this is given in the trial balance as drawings. Income tax is also a type of drawings because this expense is paid from the business. It is as good as cash withdrawn from the business. Goods withdrawn for private use, that's also a sort of drawings. Instead of drawing cash, it is goods which are withdrawn. And then personal LIC premium, that's 1,000. Goods withdrawn from private use, that is nothing but purchases for private use. And LIC premium, personal, it is paid from the business, so it is as good as drawings. So together, after deducting all these things, 2,69,500 is the balance of capital. Alright, we have entered everything in the balance sheet, and the total of the balance sheet is 3,35,000. Let me once again explain what adjustment entries we are going to pass for treating those adjustments. Goods destroyed by fire. The entry is goods destroyed by fire account to trading account 2,000. Then insurance account data, because 1,500 was admitted by the insurers, and net loss, which is debited to profit and loss account 500, to goods destroyed by fire account 2,000. If you look at these two entries, trading account is debited here. Okay, sorry, goods destroyed by fire account is debited here, and goods destroyed by fire is credited here, cancelled. So what remains is insurance account data 1,500, profit and loss account data 500 to trading account. In other words, trading account is credited by 2,000, insurance account is debited by 1,000, which appears in the balance sheet, and profit and loss account is debited with the net loss 500. For private purposes, purchases included in purchases. So purchases include private purchases of rupees 1,000, and therefore that's not meant for resale. So purchases should be reduced to that extent, and it's as good as drawings. So drawings accounted to purchases. So drawing this value 1,000 goods withdrawn for goods purchased for private purposes should be added to drawings. Secondly, it should be deducted from purchases because These purchases are not meant for sale or not meant for business purposes. Therefore, it is deducted from purchases. Purchases is debit balance. So here credited means it should be deducted from purchases in the trading account. Drawings is a debit balance. Further debit means it should be added to drawings account. Goods supplied by Kirti worth rupees 3000 on credit on 30th September 2020 and not entered in the books. So it is nothing but purchase account debtor to Kirti's account, and Kirti's account is included under sundry creditors. So add to purchase account is a debit balance. Further debit means it should be added. Kirti's account or sundry creditors account, it is a credit balance. Further credit means it should be added. Bills receivable from debtors dishonored, but no entries are made in the books of account. So when you draw the bill of exchange or when you receive the bills, entry will be bills receivable account to sundry debtors. But now that bill given by the debtors is worthless, so reverse entry should be passed. So debtors account should be debited. So further again debtors value will increase by 2000 and bills receivable value will decrease because what is given them is useless and worthless. So it will be you are reversing that and it will reach the original position. Sundry debtors account to bills receivable account. Sundry debtors account is a debit balance. Further debit means add. Bills receivable account is also a debit balance but credited here. That means it should be deducted. Then for checks from debtors dishonored 1000 but no entries are made in the books of account. So checks. When you receive the check, bank account debtor to bills receivable, sundry debtors account. It is received from the debtors. So bank account to sundry debtors. Now check is dishonored, so reverse entry sundry debtors account to bank. How to give the effects? The sundry debtors account is always a debit balance, so further debit means it should be added. Bank account is a debit balance. Here credited means it should be deducted in the balance sheet. So that's about this problem. Thank you for listening.